Test. Okay, let me see if this is working now. Hi all, and welcome to another edition of TraderCast YouTube Live. Now, I just had a double check with the audio setup. So welcome. My name is Phil. I'll be your presenter today. We're going to make this fast and furious. This will take 15-20 minutes of your time. But basically what I'm trying to do here, I'm looking at some key trading levels for popular markets, and I'll be talking to you about some of the live trades that I have. I actually have a couple of them open right now. This is a little bit about myself. If this is your first time that you're watching this and you're looking for the community of traders, check us out on TraderCast.com. If you are brand new and looking for the education, make sure you check out mytradingskills.com. You'll see quite a few free courses that you can attend, get a flavor of what it is, and if you like it, check out the Trustpilot rating as well. Before you decide to either subscribe to some of the other premium courses or walk away, because I might not be your cup of tea. I also offer trading education. I am also a market analyst. Over the past 10 years, I had the privilege of speaking in front of various different industry events and our own events, and I had the privilege to teach many people how to trade. Some of them brand new, and some of them were already trading either as intermediate or kind of more frequent traders, but they needed the help with a specific area of their trading. It could be risk management, psychology, or something like that. Big disclaimer, anything that I talk about here today are my opinions and experiences only, not advice. I do not have the feel for your personal investment and trading objectives. But what I'm doing here is I would like to show you what I think you should be able to do if you spend enough time and you're dedicated in learning how to trade and so on. So from the open positions point of view, last week was quite volatile. US equities were selling off heavily. I got stopped out on a couple of positions with Nasdaq and also with S&P. That was all on Friday. For those of you who watched last week's sessions, you know I was looking at crude oil pullback to 83.50, and I got that, so I'm in that trade at the moment. It doesn't look that good at the moment. I'm still in a little bit of money, but it doesn't look that good as it did earlier on. And I'm also long gold from 1830, and also, if you remember, I was looking for a pullback to that level to potentially buy. So from gold point of view, this is what I wanted to show you. Gold in this particular time frame looks like it's uptrending. From the economic data releases, there is a significant volatility event which could happen midweek, and if you don't know what it is, you can find out more through TraderCast. It's going to be midday in US or evening time if you're in Europe or UK, which will trigger a massive volatility across US dollar currency crosses or US dollar in general. By default, it will trigger volatility with gold as well. But currently, Monday, 24th of January, of 2022, this looks like an uptrending market. I was looking for a breakout, a retest, and kind of a retest of this previous resistance as a newly found support for another push higher. I got that, got filled at 1830. My stop loss was initially down here at 1820, so $10 of risk in price, and I'm looking for a push higher through these highs. 1848, 1850, 1860, 366, 1875 and higher. So that's the premise for my trade. From the risk to reward ratio point of view, I'm happy with multiple of potential reward for the definite amount of risk taken. So where am I at the moment with this? I currently moved my stop higher to protect my position, and I'm just letting it run. I will monitor the situation and decide if I want to take some partial profits. But so far, this is where I am with this particular trade. So I'm currently long from 1830, and my stop was initially below at 1820 down here, then moved slightly higher at break even, and now I moved it up here, which is about 2.5–3 points above the entry, just in a case. I would like to see a breakout through these swing highs here for a potential push higher towards 1848, 1850 and higher. So that's what I am. I'm currently in this trade, keeping it open for now. Apologies, so let me just do this here. The other thing that I have, the other trade that I have open is crude oil, and yet again, for those of you who watched last week's sessions, I was explaining the reason why I would like to get in at 83 and then 83.50 subsequently. I got filled at 83.50, which is down here somewhere. I'll show you that trade in a bit. So breakout, retest and the push higher. So I was looking for a push and breakout higher. I'm bullish crude oil, and I would like to see a breakout of these swing highs for the potential retest of 88 and then 89, 90 and higher. Some of the kind of investment banks and other economists and energy markets, commodity markets analysts are pointing to a possibility of $100 per barrel oil going forward. So I'm in this trade. This trade looked much better before. Now it doesn't look as good as it did initially, but I'm keeping it open. I'm still in the money, and my stop loss is at the appropriate level. So I'll show you where I am with this trade in a minute, and I'm keeping it open for now. So if I just remove this, and then I'll tell you about a couple of other things that I'm looking at, dollar yen in particular, and then some of the US indices, because they're quite volatile. They were moving a lot, and potentially we could see some more volatility to come. So this is my trade on crude oil. I'll just change the time frame here to so you can basically see. Yeah, this is a better view. So pullback down to 83.50. Got filled there. It was triggered by limit order, so I did not trade this at market. I actually had an order pending, and when the price came to that level, my stop loss was at the appropriate level below. I moved it closer, so I'm reducing my risk now. I'm still carrying some risk, about 36 points of risk here, and I'll see how I feel. If the price does go to 83.50, I might choose to get out of this position. I might manually close my position. I'll see if there are any breaking news, if there is anything new coming up which might trigger a market volatility. I might choose to do that. But just in the case, if I'm busy doing something, or if I step away from my desk and go to grab a cup of coffee and the price flushes through my entry, I want to have my stop below with this amount of risk. So if I lose that amount of risk, and that's it. So that's with my crude oil, and I am happy to keep it open. Now, a couple of other things that I am paying attention to. There's S&P setup, which is potentially just coming to some interesting levels. This is S&P. You're seeing massive sell-off over the past week or so. I was trying to buy S&P on a few occasions at some strategic levels, at some psychological levels, at some bespoke support levels, and unfortunately that didn't happen. The price didn't stop, just kept on falling through, so I walked away, and I also got stopped out on 2 trades with S&P, because I got filled, it was short-lived, it was an intraday scalp, and then I got stopped out very quickly. So there was no reversal whatsoever. And the concerning bit is that we finished last week at the day's lows. Friday was closed as a bearish candle as well. So this is signifying the possibility of a further corrective pullback, but in even most severe corrections you have oversold bounce backs. And the level which I am paying attention to for today is at 43.30, 4330. The price is below where we closed on Friday. So a couple of scenarios here. We could see an attempted rally at the open and then another leg lower, so something like this, which would be a continuation of the trend, i.e. bearish. Or what could possibly happen as well is we could see a pullback before the markets open, sucking as many people in to go short. And when the markets open, we see this potential reversal and then a short squeeze, and that picks up some stops on the upside, and then the market starts rallying higher on a falling volume. So that's possible as well. It's overextended to the downside quite a bit. I don't have any indicators here. I don't have any annotations on the chart as such. This is kept fairly simple, but the level that I am paying attention to for today is at 43.30. In particular, if I see a breakout through 43.95, 43.98, that could possibly intensify that kind of short squeeze and a push higher as well. So that's where I am with this. The initial premise is that potentially we could see further weakness before we see some reversal dip buying. So anybody who's short might be looking to close their position, and if they do so, they need to buy. They need to buy at some point. Stop would be at 42.70. So a generous 60-point stop, but also from the take profit, potentially 44.20 or 44.80, 44.90, 4,500 on the upside would come in that case. So that's where I am with S&P. I'll assess and decide how I'm going to play this when the US markets open, and that's in about 40 minutes from now. So nothing open on S&P currently. I might choose to do something when the markets open. The other thing that I'm paying attention to, and I'm doing this because I know there's quite a few people from Europe or UK who are paying attention to this. A setup for FTSE would be at 73.80, 73.70. So this previous swing high here, this swing high here, breakout and a retest. So this is a corrective pullback, quite a severe corrective pullback, which could potentially open the way for more downside. If the price is to reverse, it should start reversing from around this zone here. So this is the amount of kind of risk, and if it does reverse, then potentially we are seeing 74.70. Apologies, 74.70, 74.90 on the upside as a level of interest. So risk to reward ratio decent. I would like to see some kind of trigger here. So pullback and then a rally from here to the upside. That's for FTSE. It's not triggered just yet. Look, it's a really solid green red candle in an hourly. It's a solid. There is a little bit of buying here, but it did not. There was no follow through. And then from the 15-minute time frame, I think FTSE would likely follow what happens with US markets when the US markets open. I'm aware of the time. The last thing that I want to talk to you about very quickly is with dollar Japanese yen. And with dollar Japanese yen, it's a very similar setup. For those of you who watched my previous YouTube live broadcast, you know I was looking at, I like dollar yen at 114, so I was getting in and out of that trade around that level. The price flashed lower, but I'm seeing this as a still uptrending market. So this is still uptrending market to a degree. There's a sloping trend line here. So what I'm looking for with dollar yen, and bear it in mind, I'm going to repeat this again. By middle of this week, Wednesday, there'll be a significant data event. Sorry, I'm just hearing some breaking news here. There is significantly, by Wednesday, there's a significantly important event which will trigger volatility across the US dollar currency crosses. And as such, we could see a massive volatility in US dollar currency crosses, but then also commodities which are priced in US dollars like gold and oil and so on. So the level that I'm paying attention to with dollar Japanese yen is at 11350. So cluster of these lows, cluster of these lows. If I see a pullback to that level, and then a nice reversal. So this could be the beginning of it. It's not there just yet. We could have another attempt lower and then maybe a retest of that level. So something like that. So either a pullback and then a rally, or the other opportunity could be that we have a little breakout above these current highs, breakout and then retest for another leg higher. But anyway, the level that I'm paying attention to is 11350. I would likely be looking to see if I can get a nice reversal there from the swing point of view. My stop would be down here at 11320 to 11310. So about 30 to 40 points of potential risk here for a spike higher, an attempted move towards 11420, 11450. So 70 to 100 points of potentially or 80 points of gain to the upside. It's not the exact science. It depends on what triggers the entry, how the candle finishes, so that I can read it and react to it, and that will determine the distance from the entry to the stop, the number of points that I'm risking on this trade, but it will also determine the potential risk to reward ratio as well. So far I'm paying attention to that level 11350 to the downside as a potential point of interest for the reversal to the upside. This is everything for today. I'll be back tomorrow at the usual time, 1:30 London time. I am stopping this broadcast now and I'm going back to TraderCast, where I'll be starting the afternoon broadcast. We'll go into this style of market analysis, but using more detailed approach. We'll have a breaking news on, and there'll be an explanation on why and how from the fundamental, not just the technical point of view, and the key trade levels. So stay safe, happy trading, bye for now, and I'll speak to you all tomorrow. Thank you for watching. Thanks, bye.